This is Kara, Yo, and Stacy. We're looking today at protecting crypto exchanges, protecting against hacks and manipulation. And as I guess we all know, there's been quite a history over the past few years of hacks. They keep coming, and there's sort of a reputation in the space for hacks and insecurity. And so we have with us three experts on crypto security. First of all, just on hacks, is there a primary lesson to be learned from all the hacks that have taken place up until now, so that the next exchange or the exchanges operating today can prevent that from happening? Yo, you started one of the first exchanges in the U.S., which you sold to Kraken. What can be learned from Mt. Gox and other disasters?
So I feel like most of the hacks that happened with exchanges are due to relatively simple security issues. It's usually not some sort of like crazy exploit of a new technology. It's usually the normal things like phishing and social engineering or SIM swapping or things like that. And I feel like most of the exchanges that get hacked could put it in better security practices, just knowing that they are such a gigantic target, such a honeypot for hackers.
Stacy, you're in charge of security, or you're in this area at Kroll. When there's been a breach, when there's been a hack, what do you do? The blockchain, I presume, would allow you to at least follow the trail, right?
That's the difficult part. It's almost nearly you can't follow the trail because it's all encrypted or protected from that perspective. One thing that's common is a lot of the fraudsters, if they're in a group and they're working together, they do have encrypted chat channels that they're using, sometimes hosted by the exchange, but a lot of times just regular social media things, WhatsApp, different things like that they're using to chat, and that way. From an investigation standpoint, you can go back and kind of start to follow a little bit of the communication. And so to your, they are simple security controls and things that you can put in place. And I think exchanges could do a better job of understanding, or educating users on the different, who's chatting where, and giving access to those folks, to the investigators as necessary to track things down if possible.
The other thing I would add to that is that with chain analysis, especially with something like Bitcoin, and it can even go to things like Monero, which are supposed to be fairly anonymous, you can figure out very often where transactions are going in between and like where the money is moving. But when money is stolen from exchanges, usually that money is funneled to other exchanges. And like even very recently, there was something shown where like there was a big hack from one of the Korean exchanges, and like $30 million moved over to Binance. And I think that shows that the exchanges aren't working very well together to basically limit that type of behavior. If there's a bunch of money being stolen and it starts being deposited onto their platform, they should.
So Kara, Yo was making the point earlier that a lot of this is not super sophisticated technology. It's sort of rather simple. But is there somewhat of an arms race between sort of the light side and the dark side, the light web and the dark web, if you will?
Yeah, so I think a lot of the issue is wrapped around the misconception of security when it comes to blockchain. It really focuses on integrity and non-repudiation, validating the origin and the authenticity of a message, and not so much on securing or scrambling the data and protecting and providing security for the actual data, protecting the coins and the access to them. Do you have the proper authorization to actually access that data? So to his point earlier about the exchanges, there's some exchanges that don't have simple security controls, such as making sure that only the users can have access to their money. And if login credentials can get compromised, why are they able to log in and have access to that data? Just because they're an employee of a company? No one should have access to my money except for me.
So if you're looking for an exchange, if you're trying to choose where you're going to buy and sell crypto, what kinds of questions should you ask? And how do you differentiate between the different types of exchanges, the different places, theoretically worldwide, right? That you could use.
Yeah, so there's centralized exchanges and decentralized exchanges. There's some hybrids as well. The centralized exchanges, the issue there is that they hold the keys and the money, right? Can you imagine in the physical world putting your money in your safety deposit box at a bank and taking the key and leaving it with the teller at the window on the way out the door? No one would do that.
So you're against that. That's a bad thing.
Aren't you?
I suppose so, yeah. But you hear, on the other hand, you hear horror stories of people losing their own keys. They write it on a piece of paper and put it in a box and bury it in the backyard and that kind of thing. I mean, is there a more consumer-friendly answer out there? And is any particular exchange or any group of exchanges providing it?
Certainly, and so no one is actually providing that right now. It is based on putting that in your safety deposit box or your safe at home and writing it down. But again, that's not protecting the actual coins. That's just your wallet signatures for digital signatures and non-repudiation, hashes, things like that.
So when you go to an exchange, say you want to open an account, what kinds of questions should you ask them, or should you seek out in their FAQ or whatever?
I think I would look at authentication procedures, things you can set up. I have my public wallet key and my private key, but does it also require a PIN? Can I have a wallet connected to the exchange as the so-called hot wallet, and can I take it off and have it be cold where it's not accessible at the time until I'm ready for it to be? Certain things like that, and does it educate people on different trends that they're seeing? Hey, a couple people have reported all of my Bitcoins are gone, all of my coins are gone, whatever. Let your user population know, hey, there's something potentially going on. Some people may have been phished, et cetera. Maybe they, who knows what's going on. But education and awareness, maybe that exchange could be more helpful. I don't know of any that do that, but that would be a good idea. But asking questions like, how can I be aware if everybody, Kara and Yo, have lost all of their coins? I don't want to either. How do I become aware of this? Things like that I think would be helpful.
Yo, you were talking about the Korean instance of the hackers simply moving the money to another exchange. What kinds of things are happening, and what kinds of things need to happen on an international level between regulators, between exchanges?
So I think that there needs to just be standards that exchanges follow, because you asked what kind of questions should you ask, and I think as a cybersecurity person, there's a lot of questions I'll ask an exchange, but I don't think it's reasonable for one of the regular consumers to have to know enough to be able to ask those questions, let alone understand the answers. And I think there's a minimum level of security that exchanges should be subject to, and it's kind of up to regulators to enforce that. Even auditable records that they have control of the finances still. There's been so many times where exchanges have been hacked, they haven't told their users, and they did not have control of the funds. And at that point, they were essentially illiquid.
Well, what kind of disclosures are exchanges, the big exchanges, providing? And is that adequate? Are regulators requiring them to provide everything that you need to have?
Right now, I think, at least in the U.S., they're still trying to grasp their figure it out. I know that there's a lot of smaller governments like Malta and Gibraltar and Caymans and stuff that are actively putting in place right now standards that blockchain companies and also cryptocurrency exchanges have to enforce at a minimum level, and third-party outside audits. I'm
sorry, you're saying that you're better protected in the Caymans or Malta than you are in the United States?
Well, they just move a little bit faster as far as enforcing all those things.
That's interesting. I would have not have thought that. In terms of security, we were talking a little bit about this before. What is the difference between the security that you would want on NASDAQ or CME, a regular exchange, a different kind of exchange, and a crypto exchange? They're both exchanges, but they operate in fundamentally different ways. So
I'll take that. The exchanges today and the banks today are held up to really high standards and accountability. Mm-hmm. And so, they are audited. They have information security policies, standards, procedures. They have security operations centers that monitor. They make sure that they have all of their systems up to a certain standard that they're required to have, and they get audited to that. So I think that that's a huge difference that you see today. Like, there is no regulation, right? There is, and we're catching up to that, and I think it'll get to that point. We're working right now with Malta, my company, to help write those regulations and keep a certain level of accountability to these new companies.
Well, about once a week or a couple of times a month at least, I get a press release from an exchange that says we're the first, or we're going to be the first SEC-approved exchange. Is there an SEC-approved exchange?
No, not at the moment. What I believe the SEC is doing is, like you said, trying to understand how they should address this. And put those requirements in. And so they're looking to the governments that are moving a little bit faster because they're smaller on this, and looking to the Singapores and the other areas that have limited and set out some requirements and some restrictions. And then they're looking at, okay, where did some of these hacks happen? What happened in China, where they had to shut things down, and trying to really understand a little bit more before they set forward.
And do you get any protection? Is there, the exchanges now mostly register state by state, right? So they have money change licenses, that kind of thing. Are you getting protection from New York State, or is there someone there that you can count on to help you?
That's a great question. I think the answer is probably not, or it depends on where you are and what the case, what actually happened. So. Right now, because it's difficult. Let's say you lose all your coins; it's difficult to track where they went. The protections aren't very strong.
And the other thing that exchanges that are always telling me, or that the pitch that I hear a lot is, we're a decentralized exchange, and that's much safer. Is it much safer?
So the biggest difference between like a traditional exchange and a crypto exchange is the fact that there's wallets that are holding all those assets, and if those assets are transferred out, they are in most cases irreversible. With a decentralized exchange, most of them allow you to custody your own funds. So when a transaction happens, it does like an atomic swap or something else where basically the funds don't leave your wallet until the moment that whatever you're trading it for hits your wallet. And so in that sense, it's safer for if you don't trust the exchange to keep your assets safe, but the usability of managing your own assets for the crypto tech, blockchain tech is somewhat complex, and people lose their wallets all the time. Far more has been lost than been stolen.
I can't tell you how many times I've had people tell me, oh yeah, I own 12 Bitcoin and I lost my key and now that's gone. And of course at the time it was $12 or something. But
yeah, I've lost hundreds.
But so far the context, I think, of our conversation has been about hacks. What other kinds of dangers are there in terms of manipulation? Is there spoofing? Is there front running? And how can you, one, know if that's a danger, and two, what can you do about it if you're a security person?
Yeah, I think you need a solution where you have backups, right? I mean, relying on a USB drive in your safe isn't really the best solution, but that's the best solution that we have right now that's out there, right? But those drives can be faulty. You could lose it. You can forget your password. All these kind of things. So we need to have multiple copies and backups. Mm-hmm.
But in terms of like the decentralized exchanges, I've heard it said that spoofing is a danger, that I guess you can suggest that there's going to be a big amount moving and then...
It's your typical pump and dump schemes. It's, hey, this is coming up, let's buy, and then it's criminal activity, and it's been proven that the fraudsters are in there pumping up the value falsely then to sell it, right? So it's your typical schemes that happen in financial fraud, and it's just kind of tracking those down and understanding how that works with Bitcoin. And again, tracking, they're all chatting on back channel communications, looking at those communications and making sure, if there's red flags, we alert and say, this isn't real, or this could be fraud, potential fraud. It's setting up those kind of alerts to holders of the coins.
But aside from loss, we've had the biggest hack in history this year, right? In January with CoinCheck losing, millions, 500 million NEM. And so, again, it all goes back to being able to properly secure that data and making sure that we have all these different types of countermeasures in place to protect from vulnerabilities.
So to what extent are we going to see these problems addressed and a comfort level that will allow, Vanguard to jump in or pension funds to jump in? And what else needs to be done to sort of get to that point? Because everybody keeps talking about that. In fact, I think it's the next panel is on that topic.
Yeah, I think you need more partnerships between banks and crypto companies. Banks have trust, they have longevity, they have history, right? And so the general public is used to dealing with those big names. Do you want to store your money with Vanguard or do you want to store your money with CoinCheck? Which company are you going to go with?
Well, I thought Bitcoin was going to get rid of banks. We're not doing that anymore.
I'm a big proponent of no. I think that it's really, you can't wipe out the banks, right? I know there's a lot of blockchain conferences around that people say, the heck with the banks, but this is something that's part of our history. And again, it's trust is the most important piece. That's what people always fall back on.
And I think banks have the KYC procedures, the ability to authenticate Stacy's who Stacy is. So adopting those, into the Bitcoin and the, digital cryptocurrency area is the key. They already have these trusted procedures that work. And so adopting some of those so that builds up more trust in these types of, different coin exchanges. And so that's the hard part because by default, they're supposed to be anonymous and, protect your who you are and who this is you're exchanging coins with, other than that wallet number, that public wallet key number. So it'll be interesting to see where we go, how we adopt those and adapt those to digital currency exchanges.
Yeah, I think that the big thing is custody solutions and the way they come. And if exchanges custody their assets with firms that actually can secure those assets correctly and provide like an audit trail that shows that they're always in control. And I think like a lot of it has to do with how multi-signature wallets will be embedded into those custody solutions. Right now, I feel like most of the firms that are exploring it right now aren't quite there yet from a security perspective because of just the way the technology works. Probably the firms that are the closest are not even yet custody solutions like Coinbase.
I guess the last question, we talked a little bit about it before we came on, is the fact that you've got NASDAQ and NYSE looking at this, you've got State Street and BNY Mellon considering custody. So you have this situation where you have these well-known names in finance that obviously are going to give a comfort level to the big institutional investors, but probably don't have the expertise. And then you have the people who do have the expertise, and you have to figure out, is CoinCheck or Kraken or something, trustworthy without 100 years of history? How do those 800-pound gorillas completely change the game, or do they come in and have to learn everything the hard way?
Again, I think it all comes back down to partnerships, being able to bring those two together. I think you get the best of both worlds in that solution.
They're going to have to learn the hard way.
Learn the hard way.
I think the banks are going to have to learn the hard way on what this is and how to work it, and build that trust with the partners that they're trying to partner with that do know how the technology works. So.
And when's that all going to happen?
Tomorrow.